I bet you can't guess which two cities are considered the best buyer's markets right now. Hey there, welcome back to Bald Prairie Real Estate. My name is Matthew Pfeifer, real estate agent in Regina, and that's my trusted assistant, Matilda. This is the weekly news recap where I go through what I think are the most interesting Canadian real estate related news topics, and I give you my thoughts and opinions on them. We'll be talking about which two cities are Canada's best buyer's markets, but of course, let's start off with another one of my terrible bad dad jokes. What do you call a sheep that can sing and dance? Lady Baba. If you have a terrible joke I can use in a future episode, put in the comments below. Let's get into this week's Canadian real estate news. Starting off, Calgary is ranked as the #1 Canadian real estate market to watch in 2025. This is a report put together by PwC, and it's more focused on the investment side of the Canadian real estate market. On this channel, of course, I like to focus on you, the end user that's looking to buy your primary residence, but it is good to see the other side of this to get some different perspective. They've got Calgary ranked as the #1 market to watch in Canada. Interestingly enough, Vancouver and Toronto came in at 2 and 3. Not sure if I personally agree with that. We'll have to wait and see. They have Edmonton, Winnipeg, and Saskatoon all in their top 10. I think a lot of people are sleeping on those three markets going into 2025. I'm expecting those will continue to be some of Canada's hotter real estate markets. They've really heated up recently. It's also interesting to note that both Saskatchewan and Alberta do not have rent controls, and yet those two provinces have some of the lowest price to rent in Canada. You wouldn't think that those two would go together. I am also going to do a 2025 Canadian real estate market predictions video. That'll come out in early January, so make sure you get subscribed so you don't miss that video when it comes out. Let's get you up to speed on this week's best mortgage interest rates. Starting off with insured mortgages, the best 3-year available, Radius 4.39, and that's unchanged. The best 5-year fixed is through Radius 4.39, and that's unchanged. The best 5-year adjustable through Manulife 4.95, and that is slightly down from last week. And the best static variable 5% through Manulife, unchanged. For uninsurable mortgages, the best 3-year is 4.69 through TD, that's unchanged. The best 5-year fixed, 4.59 through Manulife, unchanged. The best 5-year static variable, 5.4 through Scotiabank, that's a small drop. And the best 5-year adjustable, 5.45 through Strive, unchanged. The best 5-year insurable mortgages I could find through the big 5 banks are as follows: CIBC 4.34, unchanged. Bank of Montreal 4.45, unchanged. TD Bank 4.49, unchanged. Scotiabank 4.69, unchanged. RBC 4.74, all unchanged. This is now 3 weeks in a row where interest rates have really been unchanged, but that hasn't been the case for the bond market. This here is the 5-year Canada bond rate, and that is what's going to impact fixed rates. Now, this is a month chart here. We don't have just 3 weeks, but you can see over the month, it has gone up over the last 3 weeks. It's gone up about 10 basis points, and we usually expect fixed rates to follow that, but they haven't done so yet. As I always say, the lowest mortgage rate isn't always the best mortgage. And I had a viewer ask me, why do I say that? I just did a video, and I will link it up here, one of those cards, and a description below, so you can watch that video where I explain why the lowest interest rate may not actually be the best mortgage and might actually cost you more interest in the long run. Now let's talk about Ontario seeing a 70-year low in single-family home construction. Each month, CMHC comes out with their housing stats report, and we have seen all through 2024 that those numbers have trended down. Even still, a large percentage of those starts are not single-family homes, but purpose-built rentals. And I think ultimately, you guys let me know in the comments below, most people would like to have a single-family home over a condo or a townhouse. And that's what we're seeing fewer and fewer of built in Canada is single-family homes. And that's continued to put upward pressure on prices for single-family homes. This article is focused, of course, on Ontario single-family home construction, which has hit its lowest level of starts since they started tracking records in 1955. And I like to rag on the federal government here about how they're never going to hit their promised 6 million homes built by 2030. But the provinces don't get a free pass here either. The Ford government promised in 2021 as part of their election platform that they wanted to get 1.5 million new units built by 2031. And there was a lot of controversial aspects to that plan. But right now, with the slowdown in construction, they're going to have to double their quarterly housing starts just to hit that goal. And I'd say the odds of them hitting that are basically zero. Now let's look at the monthly Canadian Real Estate Association stats. This is looking at the October's numbers here, and I'll have to look at my numbers because there's no way I'm gonna remember all this. Sales up 7.7% month over month. They were up 30% year over year. New listings down 3.5% month over month. The home price index was down 0.1% month over month and down 2.7% year over year. If you're a regular viewer of mine, you've been watching my monthly Canadian real estate market updates. Probably these stats aren't that surprising to you. If you're new here, you really should check out that video. I'll put a link up to that and one in the description below here, because I go and I break down 11 individual cities, and you will see there's a big difference between what's going on in, say, Calgary and Edmonton than Toronto and Ottawa. A couple more interesting stats here. Sales to new listings ratio went from 52% to 58%. Remember, the national average long-term 55%. Looking at the composite benchmark price, HPI, you can see that nationally prices have basically traded sideways all year long, no real changes. They are up from where they bottomed out in late 2022. But of course, if you watch my monthly real estate market update, there's stark differences across the country. Winnipeg, Calgary, Saskatoon, all up, 6-7%. Toronto, Vancouver down 1 to 3%. So the national stats are nice to give you a snapshot of what's going on, but it's not going to be very indicative of what's going on in your individual market. And while personally I like that composite benchmark price, I think it's more accurate than average price. Looking at the average price chart, you can see here that every single province in Canada except BC, and that's not by much in BC, has seen year-over-year price increases for the month of October. I know there's been a lot of chatter online and in the news about the mortgage renewal wave coming through 2025 and 2026, the impacts that will have on the Canadian real estate market. I talked last week about this specific topic in my weekly news recap. That video did exceptionally well, so you've probably seen it, but if you haven't, right here, and of course, link in the description below, I've got some thoughts on what I think's gonna happen versus maybe some of the media hype. The Canadian Real Estate Association is attributing this bump in sales to the 50 basis point cut we saw in October. Personally, I disagree with that. We've had 1.75% of cuts so far this year, and I truly believe that that cumulative effect of all those cuts and the expected direction of interest rates has a far bigger impact than one singular rate cut. We've also seen fixed rates trend down essentially all of 2024. That, in my mind, has a far bigger impact on buyers' decision and thought process than one singular rate cut from the Bank of Canada. They do point out, and I think correctly so, that we saw a fairly large number of new listings come on the market in September, meaning buyers that purchased in late September, early October had a lot more choice, and that resulted in more sales, and those buyers not having to compete as much on price, keeping prices kind of flat like we've seen. Next, let's talk about an Ontario house for sale for $1. I'll tell you right now, this house is not going to be sold for $1. It's purely a sales tactic. And hey, I get it. We're talking about it right now. It's talked about all over the place. You see that type of price tag and it gets people interested in potentially the house, but more realistically, the agent gets a ton of coverage for it. And I understand people say, well, if I offer them $1, why can't I get it for $1? That's what they're asking. That's what it should be sold for. This is not retail here. This is selling a house. Similar to when you're buying a car, if the ad says $10,000 and you offer them $10,000, they're not required to sell it to you for that price. And you can disagree whether you think that's unfair or disingenuous. When it comes to home sales, it's more than just price. Price obviously matters, but things like possession day, the inclusions, what inspections, the conditions, all of those things play into a seller's decision as to who they want to sell the house to and for how much. I've been on both sides of this before, where a seller chooses to sell the house to a specific buyer, not based on things like price and possession, but because they want to sell it to that specific seller. And at the end of the day, even if you match all of the terms they're asking for, they don't have to actually sell you the house if they don't want to, again, fair or not. Interestingly enough, in Saskatchewan, we actually have a clause in our listing contracts that if I list your house for sale and a buyer comes and exactly matches every term of that sales contract, so things like price and possession, inclusions, etc., it must be obviously an unconditional offer. If that happens and you as the seller were to decline that offer, you actually have to pay me, because under that contract, I have delivered a buyer to you and provided that service as agreed upon. So at that point, commissions are due. So potentially a seller could decline an offer and still have to pay their agent in Saskatchewan. Now let's talk about the 2 best buyers markets in Canada. This article was published right around the time frame that a bunch of new data came out from the Toronto and Vancouver real estate boards. And no surprise here, that's the 2 markets they're considering as the best buyers markets in Canada right now. but there's so much more they could have gone into in this article that they just didn't, so I guess I'm gonna have to do it. They are focused on one singular metric here, sales to new listing ratio. So that is comparing how many houses are selling to how many houses are coming on the market for sale. Gives you an idea how quickly houses are being absorbed. If it's over 60%, that's considered a seller's market. 40% under is considered a buyer's market, and in between would be considered a balanced market. Again, the Canadian national average long-term, 55%. At the time this article was published, the sales to new listing ratio in Toronto was 28%, suggesting it was a strong buyer's market. But after one strong month of sales in October, that's bounced back up to 41%, meaning we're back into a balanced market. And then in Vancouver, the time of publishing again, sales to new listing ratio was 30%, suggesting a still strong buyer's market. But again, after a strong month of sales in October, that's pushed back up to 48%, right in the middle of a balanced market in Vancouver. If you had made the decision after reading this article, it's a buyer's market in Toronto or Vancouver, so I better go out and start shopping now. And please don't just read one article and make a decision to go buy a house. But if you did, you'd probably be a little bit disappointing finding out that the competition's a little bit stiffer than what you had been reading about just, a couple of days ago. And I don't think that you as a buyer should be focused on, quote unquote, trying to time the market. You've probably heard me say that before if you're a regular viewer. And I know there's a lot of people out there that have, metrics and formulas that you need to use to decide when is the right time to buy. Yes, those metrics like sales to new listing ratio, months of inventory, price trends, sales stats, interest rates, all of those are important pieces of information that you should learn as part of your buying education. But I don't think you should be basing your decision to buy a house purely on, especially one metric, but even all of those metrics, because there's more to buying a house than just the metrics. Even in a so-called strong buyer's market, you could make a bad purchase decision or find a bad deal. Just on the flip side is you could have a strong seller's market and make a great purchase decision, finding a great deal, because you should be focused on buying a house when it's the right time for you and your own personal situation. I should maybe trademark that someday. And no one knows your personal situation better than you do. So no formula or metric is going to be a perfect fit for your specific situation. Instead, when you're out looking for a house, you've made a decision that it's the right time to buy, then go out and find the best house you can and get the best deal available given the current market conditions at that time. I'm curious though, what are you guys thinking about when you're trying to make a decision to buy or not? What are the important factors? Is it what's going on in your life? Is it the sales numbers? All those types of metrics? Let me know in the comments below. And then check out this video right here, which is my monthly Canadian real estate market update if you haven't watched it already. And as always, guys, thanks very much for watching.